welcome to this first Digital Financial Literacy Summit.
Yeah.
I'd like to start off by recognizing protocol, our guest of honor, the Commissioner of Financial Services at the Ministry of Finance, Planning and Economic Development, represented by the Assistant Commissioner, Mr. Henry Bakuta, our strategic partners, the Bank of Uganda, here today represented by the Director of Payments, Mr. Makeo. Our other strategic partner, Financial Sector Deepening Uganda, represented by Jackie, the Uganda Bankers Association, whose members have funded this month, the National Insurance Association, who has also funded this month, and Summit Consulting Uganda that have been here supporting us on the technical aspects of this month. I'd also like to recognize in a special way captains of the industry. In this case, I would like, and a representative of the board, Mr. Maher Ahmad, thank you very much for coming. The Managing Director of Cairo Bank, our partners on this event, FITSPA, that have really assembled technical experts in the field, the media present, ladies and gentlemen, all protocols observed. Once again, good morning. I do warmly welcome you to the Digital Financial Literacy Summit, whose theme is delivering inclusive financial services using technology, looking at security, safety, efficiency, and client centricity. This is week 4 of the Banking and Financial Services Awareness Month, which we launched on the 10th of November under the theme, Your Money Can, Be Money Smart. You must have noted that this campaign, quite unlike many, has focused on all the pillars of personal financial management, because if COVID showed us anything, it was that you could not depend on one pillar to survive. And there's no better opportunity for us to understand what total financial wellness is. Now, this week has been dedicated to digital financial literacy, culminating in the summit. We have had several eye-opening webinars delivered by our partners regarding this subject, which I invite you to check out on the dedicated portal, www.yourmoneycan.or.ug. You will find all the month's webinars there. Now, the main goal of the month is to improve financial literacy among the public and connecting service providers to users, all of which should improve financial inclusion, which by definition, as you know by now, is having access to and using a broad range of quality and affordable financial services, and which will definitely ensure a person's financial security and total well-being. Now, we know that financial inclusion is a key tenet of our population's well-being and national development, but it all starts with awareness and knowledge that will empower to make people, to enable people make informed financial decisions. Now, in 2018, the FinScope survey showed that only 11% of adults use banking services and 9% had accounts, while 2% did not have accounts but used the services anyway. We also know that insurance penetration right now is about 0.78% when you compare it to neighbors like Kenya. Of course, we're still struggling with Rwanda and Tanzania, but when you compare it to people like Kenya, you know that South Africa, for instance, we have a long way to go. We also know that we were informed just yesterday that in terms of retirement planning for savings, at least the NSSF alone has got about 1.3 million or thereabout savers. Now, out of a total population of 47 million people, even regardless of the fact that we are mostly a youthful nation. They also showed us that only 5% of retirees, only 5% achieve total financial independence. That was really scary. So it really shows you how important this month is, but also how important it is to embrace other ways of putting away money, like the digital ways. So We also know that digital financial service is constantly improving the rate of financial inclusion. And for instance, on a regional scale, it was reported, this is a little way back, but I think it's a statistic that would be good for you. In 2014, 12% of the sub-Saharan Africa population had money accounts, as mobile money accounts, as compared to the global average of 2%. And our area was hosting 50% of the world's mobile money providers. So oftentimes when we see trends like this, we assume that the trends are coming from the West. But clearly you can see that our opportunity is really in a lot of mobile money, because we have, at least in Uganda, 76% of our population is in the rural community, and it's very difficult for them to access banking services. But what is mobile money without banking services? Because again, you realize that very many people are not able to go between the two platforms, even if they have the opportunity to. And this is where a summit like this comes in. Now, in a poll we did at the webinar, one of our webinars, 100% of the respondents had used digital financial service. However, 100 of them mentioned they needed to know more about digital finance. So what does that tell you? In addition, 100% of the respondents showed they were concerned about digital finance security. Now, the poll was very unprecedentedly skewed. We have been doing 2 polls at each webinar. This is the first webinar where we had 100%, 100%, and 90%, showing you that there is a gap. Now, in digital financial literacy, we would be looking at creating awareness of the different types of products and services, awareness that some financial products may be informal as well and unregulated, and therefore calling for caution or reformed use, giving knowledge on consumer rights and obligations in the digital world, and implications of accepting terms and conditions of a provider, including such elements as digitally signing a contract. So those are some of the things that we would have to be concerned about. So in essence, digital finance could be the difference between life and death. So for instance, you know very well in Uganda, there are some places where you go, if you have a sick person, you won't be attended to unless you have money. So if you are lucky, and the service provider accepts digital money, then you will survive. On the other hand, if they accept and you don't have it, there will be a challenge. Business or no business, for those of us who don't yet accept digital money, you may lose a number of customers. Water or no water, right now we know at least the rural urban poor have got they're accessing water digitally. So if they are unaware, if they think the token cheats them, then there is no water for them. Power or no power, all of us who are on here can know that. Transport or no transport, and so much more. But how much of it do we know or do we use is the question. So I'd like to stop here and let the experts take us through today, and especially focusing on the theme as it is. I would like to also thank our sponsors very, very much. The logos have been moving around. They've been mentioned very many times. Our platinum sponsor, Bank of Africa, KCB Uganda, ABSA, EcoBank, Golden Sponsors, Stanbic Bank, Cairo Bank, Agford, Pride, Housing Finance Bank, Finca, BRAC, Finance Trust. I think I have not let down anybody, but really, we are really, really grateful for your amazing support in this program, including, of course, our strategic partners. We can't thank you enough. Like it's been mentioned, we are going for the last leg of the month, but that doesn't stop the conversation. One of the things we kept on facing during this period is that some people will tell us, we've been told to save every time, but every time you tell people to save, they tell you, save what? I don't have the money. The campaign is trying to tell us, whatever you have, save it. No, save some. It's telling you your money can, just be money smart. So that conversation has to continue. We We've talked about family and money. We've talked about very different aspects of money. So the discussion and conversation continues, even if next week we end with a Career Awareness Month. That will week, and which will culminate into the launch of the new UIDFS membership structure, which is becoming more inclusive than previously, and also calling upon all players in the financial services sector, practitioners, to at least have individual membership for benefits that you will get to learn at that point. So ladies and gentlemen, I'd like to thank you for listening to me. And now, for this particular moment, I would like to warmly welcome Mr. Makeo, the Director of Payments at Bank of Uganda, to officially open the session. Thank you.
Hello, thank you, the Chief Executive Officer of Uganda Institute of Banking and Financial Services, Commissioner, Minister of Finance, Development Partners, and all of you, protocol observed. I'm quite delighted to be here, but just to let you know that there are many things going on as I stand here. But this is part of a commitment, and representing the bank, we feel so happy when we come and find a presentation of this nature. As a country, we belong to what they call Alliance of Financial Inclusion. It's a global network which now has, I think, about nearly 100 countries. Before COVID, we used to have what they call also forum meetings, trotting, moving one part of the globe to the other. My reference to this is that if this particular global network can mobilize to that level, I think as a country we should not slow down. We should step up whatever efforts, because COVID has only showed us that it's indeed very important to have a culture of savings. So I'm happy to join you this day, but there's a lot on the plate. As I speak, my team is in Entebbe. We're looking at the implementing regulations for the National Payments Systems Act, which came into effect on 4th September. So we need the implementing regulations, because clause 74 of the Act says the players who have already been on board have up to 6 months to be able to be licensed. So this is an uphill task. We are doing everything possible, breaking work in different groups, and we hope that as we go for Christmas, with the regulations, Minister of Justice should have forwarded them to Minister of Finance, so that as we begin the year, we'll start the licensing process. This is a very important event, like I said. We're on week 4 of Banking and Financial Services Awareness Month. I'm particularly delighted about the focus of this, looking at digital financial services. We are beginning to see a lot of digital products. We recall it was about 2011 at the bank when we started a project for financial inclusion, and I was actually the project manager at that time. So I'm happy that we have been able to progress up to where we are now, and from developing from one point, taking on one challenge and taking on another. Initial location by the incident of mobile money in 2009, where telecoms came in and said they wanted to offer financial services. The central bank said it's not possible because they are not licensed. So they had to go into partnerships with the supervised financial institutions. But progressively, we have kept improving and positioning ourselves. Initially, there was no law. Now we have a law which has carved the space. To the extent that now we can license like the MNOs, aggregators, on their own right as players in the financial sector. But indeed, focusing on digital financial services gives me a lot of excitement, because we are beginning to see a lot of the things, innovations. Well, soon we shall see one in the transport sector, the informal sector. There's one product which is soon. We have seen many with farmers. We have seen many innovations with the payment of utilities at your own convenience. And when COVID came in, we realized that money may not be as clean as we thought, and also it's quite expensive. Money is quite expensive to manage at all levels, well for the central banks as well as the commercial banks. So going digital would give us a lot of savings. So at the peak of COVID, we had to talk with the MNOs through mobilization to zero rate some tariffs, so that would encourage more usage of digital financial services, especially where you have moving money from your bank wallet, from your bank to wallet and wallet bank, and vice versa. So that way, that regime went on for like 2 months, and indeed we have seen a lot of growth in the use of digital financial services. Despite all the other challenges, economic slowdown, this is still represents a growth area. And we want to move this further. Like I've said, we want to take advantage of these digital financial services and channels, because initially the problem was access. When we did the project, we're looking at financial innovations, promoting them, financial literacy, issues of consumer protection, data and measurement. The CEO talked about Finiscope studies. Finiscope studies are quite the demand side. Studies were saying that we now have 78% inclusion, people who are financially included, but just access without usage will not be a good direction we'll be taking. So all these developments were happening at the central bank took lead in most of this, but working with all of you, just like we are here today. To the extent that we dedicated a division within the central bank to look at financial inclusion. And then the next step was to have the National Payment Act passed. And indeed, it was gazetted on 4th September and came into effect. So we're trying to nurture these innovations, and we're aware, when we talk about fintechs, there are quite many. I think we're talking about over 100 fintechs in this country, doing all kinds of things. We are very open at the bank. Because COVID now, we can't meet physically. Sometimes it's inevitable, like a meeting like this. We shall have another one next week, running from 8th to 11th. We shall have a workshop here. Now the team is consolidating comments and responses from the stakeholders on the regulations which have been shared so far. And it could be a sandwich, but we can't run away from trying to observe the standard operating procedures so that we can still. We expect a turnout of maybe 70 to 100 people, and it's still going to be in this venue. It's going to be in this place. Maybe they will give us a bigger hall than this. And the law, I've talked about fintechs. There are many, and I said we are open. We want to understand what these fintechs are doing. We are not able to meet physically as we used in the past. But now at the bank, we make the basis of what we call Microsoft Teams Office, virtual meetings. We have many of them, because we need to understand exactly what's this product, what are the risks, how are the risks being mitigated before you can give an objection. we are running down, and I think maybe I'm looking at maybe 4 more products may come out. But it looks like now that we have the law, we should now be looking at 2021 as the year when we shall see more and more innovations properly authorized by way of licenses, because the law provides for payment service providers, including issuance of electronic money, operators of payment systems, and issuance of financial instruments. So in terms of regulations, the key regulations we're looking at, one is on licensing. Licensing basically how you come in, how you're expected to behave, and how you can exit. Then the other one is on consumer protection, because digital financial services call for a lot of disclosures to protect the consumers and consumer awareness. So we decided to draft a whole regulation on consumer protection. Then the other one is on agents, how the agents behave, because all these agents play a very important role, especially when it comes to electronic money issuance and all these issues. So then we need a regulation on that. We need a regulation on what we call a regulatory sandbox framework. Regulatory sandbox framework. These are new products, new innovations, not necessarily tested. So you are given a window to innovate under a controlled environment, say for 6 months, and the specific conditions. You'll be allowed to test the products. You'll be monitored by the central bank without necessarily getting a license. And once that product succeeds, then it can move to the next level of licensing. So that's another regulation which we thought is key. And so we did 2 things. We did a framework, a product framework on how regulatory sandbox operates, but also we did specific regulations on regulatory framework on sandboxes. This is not new to Uganda only. This is something which is now global. And so, like I said, I think I'm alone in the office, not alone in the literal, like being one person, but most of the technical team, even now as I speak, we prefer to be out of office, to be away from office, so that we get time and look at comments which have come from the stakeholders. In preparation for the workshop, which is next week, 8th, 11th, next week, we shall consolidate the responses and discuss with you openly and come up with the agreed positions as much as possible. Before then, we hand over to Minister of Justice and back to Minister of Finance for finalization. So, ordinarily, I would say I should have been in Entebbe with the team, but this is now part of me being a leader in this particular area. So when Gorit talked to me, I think I was in the field when we last talked. I just told her that I'll come, and indeed, coming to see what's going on here is good enough for me as a representative from the bank, and it's a good message to take back of the level of interest. And this is the route, this is where the growth is now in the financial sector. And this is going to bring some good mileage, and we are all confident that if we continue, my wish is that we do the mobilization and keep working together as a team. If you see the summit, which they call the Alliance for Financial Inclusion, Uganda is very small for them. They cannot fit, may not fit in Uganda when that meeting takes place. I was talking to a friend from Samoa Islands who said, no, we can't have this forum in our country. Our island will sink. So this is the level of mobilization, and I'm very grateful to the development partners. This is a chance and opportunity we have, and no one should be left behind. Because again, we want to put many things on the table. Now there's a law, there are regulations, but we also want to do a strategy. a national strategy of how we move as a country to promote e-payments. We have some work with FSDU and bits here and there. We also need to pronounce ourselves on how the central bank is going to provide oversight on payment systems, and that has to be put in the public domain. So the moment we have the regulations, we shall make a statement how this is going to be done. Then this will be followed up by a strategy of how we plan to move on. And indeed, just looking at these issues tells you that we need to be a team. And without taking a lot of time now, I'll really be very delighted to see you next week around the same place. I imagine you all received our invitations. And that will be the core, because then we shall discuss very, very important issues and harmonize week 4, continue to do this awareness. I'm happy. I want to thank the sponsors of SEED. It's good sponsorship. There are many players who are participating in this, and this is good for us. Thank you very much. Thank you.
Thank you so much, Doctor. For setting the precedent, we are now sure and blessed by the regulator, and he has no any other much different from what the summit is about, rather than emphasizing that the digital journey is the right journey to take. In every innovation we are doing, in every sector highlighted about the transport, agriculture, and any other sectors. Of course, we must expect the banking industry to be the main driver in this journey. Thank you so much once again, and we hope to keep in touch with you like you have promised as we continue to create this digital journey. Right now we are going to go into another session of discussions. We have our panel discussions, and at this moment, I'll be delighted to hand over to the moderator, who is Madam Stella, to take us through this session. Thank you. Thank you. As we continue to go into another session, just like I told you, this Awareness Month is being run by the Uganda Institute of Banking and Financial Services, together with our strategic partners mentioned. We have the financial sector deepening in Uganda, and at this moment, I would like to take this opportunity to welcome a representative from FSDU, that's Madam Becky Chitiva, to give us her keynote presentation. Thank you so much.
Good morning, everyone. Our guest of honor, the Commissioner of Financial Services at the Ministry of Finance, Economic and Economic Development, represented by the Assistant Commissioner, Mr. Henry Babuta, the Director of Payment Systems from the Bank of Uganda, Samakei Pamumo, all partners in this event, members of the board of the Uganda Institute of Banking and Financial Services and industry partners present, representatives of industry associations, bank representatives, the media present, distinguished ladies and gentlemen. I'm delighted to be here this morning. Thank you so much for the honor. And I wish to welcome you all to this Digital Financial Literacy Summit. My name is Becky Chitiva, and I'm the Head of Business Environment at the Financial Sector System in Uganda. And I'm here representing the Executive Director, Ms. Rashmi Pillai. Financial Sector Deepening is a think and do tank funded by the Foreign Commonwealth and Development Office of the UK government, formerly known as the DFID, and the Bill and Melinda Gates Foundation. Financial sector deepening has macro, meso, and micro pieces of work, and we take a market systems approach to deepening the financial sector. We work with the financial sector regulators to make next generation policies, supervisory compliance, and innovation frameworks. To this end, we have supported the development of Uganda's first financial sector development strategy in collaboration with the Ministry of Finance. which will establish fundamental regulation to allow fintechs to thrive. We believe that this piece of work is going to benefit at least 24.5 million mobile money account users in Uganda, and will support the evolution of mobile money beyond payments into savings, credit, and insurance. We've also supported the central bank, like Mr. Amu was saying, to provide inputs into the agent banking regulations and the National Payment Systems Bill. We are working with the central bank at the moment to operationalize the bill by supporting, providing inputs into the implementing regulations that the director mentioned a few minutes ago. We've also noted that the agent banking regulation has increased financial access point density and increased financial service competition, especially among the underserved. We also support interventions that facilitate the movement of money and information within our financial markets, and to this end, FSDU has supported the building of the first shared agent banking platform across multi banks in the country, which is a massive win for us for industry competition and consumer empowerment. As of June 2020, we've seen 11 banks on this shared platform, hosting over 9,000 agents. FSDU is also supporting government through the Ministry of Gender to scale up Uganda's social protection payments, which are senior citizen grants. And we are also helping to shape the architecture and the rules that will permit this to take shape. We also provide catalytic grants to showcase new product designs and user interface innovations that accelerate access and usage of financial services. And to this end, we launched the first ever micro insurance challenge fund in Uganda with the insurance regulator and the industry. As has been mentioned, Uganda's formal insurance penetration is only at 1%, so a lot of work still needs to be done in this area. In conjunction with the private sector, we are also working towards offering formal financial services to refugees, and with almost 1.1 million refugees hosted by Uganda, I think our country has the largest number of refugees on the continent. We've also worked to launch new fintech products and services, and supported innovators to get their products to market and to scale. And to this end, we've worked so closely with the Fintech Association of Uganda, which is FITSPA, to see that some of these take fruition. To support all this work, we conduct research that supports evidence-based policy making, and we provide input into different government policy releases. On behalf of FSDU, I want to take this opportunity to extend our sincere gratitude and appreciation to the Uganda Institute of Banking and Financial Services, the Bank of Uganda, the Uganda Bankers Association, FITSPA, Uganda Insurance Association, and all other institutions with whom we maintain a close and fruitful collaboration on many fronts, and in particular with respect to this summit. Your continued support and cooperation is highly appreciated. As market facilitators, regulators, industry associations, financial service providers, it is our responsibility to see that consumers of financial products are empowered, they have the right skills and tools to make pragmatic and rational financial decisions. We also want to ensure that consumers are not subject to unfair, abusive, or deceptive practices and have access to recourse mechanisms to resolve disputes. Digital technologies play an important role in financial inclusion, as demonstrated by the impressive rise of mobile money across our emerging markets in the recent years. Yet we continue to see a significant gap in access and usage. Digital financial literacy is therefore increasingly being seen as the solution for addressing the limited use of digital financial services. The advent of fintech products and services creates greater opportunities for financial inclusion, but at the same time calls for greater knowledge on the part of consumers to understand the costs, the risks, and benefits of the different products, and to also protect themselves from fraud and costly mistakes. Such developments emphasize the need to develop digital financial education strategies to improve digital financial literacy. Basic literacy, understanding of numeracy, intuitive design, access, enabling social norms, and robust consumer awareness all play a significant role in digital financial literacy. Knowledge of digital financial products and services, awareness of digital financial risks, understanding of digital financial risk control, and knowledge of consumer rights and redress procedures are also important dimensions to digital financial literacy. These are all enablers or minimum conditions that need to be in place for digital financial literacy to have an impact to uptake and use of financial services. A study that was carried out early this year by FSTU to assess the economic resilience of the Ugandan households before COVID revealed that the more digitally connected an economy is, the greater its resilience. And to illustrate this, the study shows that the rise of digital platforms in Uganda like Zenke, Setboda, Jumia, and many more, coupled with multiple logistic companies like PayTai and Sendi, strongly emerged as solutions for the movement of both essential and non-essential goods. These digital platforms onboarded new companies that sold fresh produce, essential medical and non-medical equipment to serve customers and businesses during the lockdown. As a result of this, we've seen that technology adoption curve of companies and consumers who were previously not convinced of the value of digital has been steep. However, we also noted in the study that there are gaps in the design of some of the digital services that are being provided by government. For example, social welfare payments that target the most vulnerable in society, identification, verification of recipients, low financial and technology literacy, coupled with low phone and formal account ownership, makes the end-to-end digital delivery of G2P payments challenging. The importance of digital access and digital skills for social inclusion has been fairly evident for most over the past decade. But a global pandemic has reinforced the need for us to take a closer look at the gaps in our policies and the ground reality. Today we embrace a changing world where physical interactions are replaced by virtual existence. We realize that there is urgent need to act towards digital inclusion. With a large section of our population still lacking basic digital needs, how ready are we to move online as a society? We probably are not. The responsibility to address this challenge of digital inclusion cannot therefore fall to just one group. And that's why we are happy to see that institutions like the Uganda Institute of Bankers has involved every single stakeholder in the economy to see that we achieve this together. Private and public organizations need to work with local governments to create a framework of cooperation to close the digital gap. The government, through its National Development Plan 3, Financial Sector Development Strategy, its National Financial Inclusion Strategy, and the soon-to-be-launched Fourth Industrial Revolution Strategy, has committed to support financial literacy programs to accelerate the use and access of formal finance. Bridging the digital divide requires collaboration and cooperation of all stakeholders, governments, NGOs, private organizations, non-profits, and academia. Ladies and gentlemen, policies and government need to work towards making digital services more accessible. Today, individual phone and internet ownership in Uganda is still very low, with only 46% adult women owning phones compared to 58% male. In addition, significant gaps in financial inclusion and financial literacy continue to exist between men and women, urban and rural residents, large and small firms, among others. While digital finance has been expected to help reduce such gaps, in reality, we still see that early adopters of digital finance tend to be those who have higher education, higher income, higher levels of digital financial literacy. This means that deliberate policy and private sector efforts are needed to increase phone and internet ownership, especially to women and other vulnerable sectors of the society. Also, financial literacy education strategies need to target disadvantaged groups of individuals and firms in order to narrow existing gaps and enable fintech to contribute to more inclusive financial and economic development. And we also realize that a one-size approach to this will not be effective. FSD Uganda remains committed to facilitate and promote inclusive financial markets that meet the needs of the underserved population. And to this end, we are working on a couple of projects together with the different stakeholders within our financial markets. We are working with the UBA and BOU on a real-time eKYC project. We are also rolling out and digitization of the social protection programs. We are supporting regulators like the IRA on their digital transformation journey. We are working with the Bank of Uganda on the National SIP project. We have also supported the Bank of Uganda on the National Financial Inclusion Strategy, most especially developing their monitoring and evaluation framework. We are working as well with the Bank of Uganda on a mobile government securities project that will allow people to invest in government securities on their mobile phones, among others. We believe that all these projects, with the support and collaboration from all stakeholders, including development partners, will contribute to the development of the financial sector and continue to advance financial inclusion. Thank you very much for your attention.
Thank you so much, Jackie. Jackie is the head of business environment at FSDU. Thank you so much for those remarks. And FSDU, just like I've told you, they have been with us as a strategic partner and still moving with us. And of course, she also continues to commit herself that they will still be with us and other partners as we continue to move this big journey. Thank you so much once again. And your superiors, we are so delighted, and the entire team at FSDU for the interest you've shown in this course. At this moment, we'll continue with more discussants, and at this moment, I also would like to welcome Mr. Dennis Luharo, who is one of our presenters. He's going to give us a presentation about financial technology services and their current update, trends that includes awareness of the levels of those products. Like you mentioned, a lot of innovations are ongoing, so many banks, so many agencies innovating a lot of products. So you're going to take us through what are those products and what are some of those awareness levels that have been created in this line of digital financing. You're welcome. Thank you so much.
As we figure out how we'll change those slides, good morning to you all. It's an interesting time coming from the telecom side, and you're talking at an event where we only have banners from the bank. I'd like to thank FITSPA and the FSDU because they facilitated these discussions. In 2009, March, I wrote an article in A New Vision, Are Banks Ready for Mobile Banking? I received a bashing from banks all the way to CEOs. Today, it's exactly what we are doing. So it's an interesting time. I'm going to start by just taking us, how do I change this? Just taking us through the events that shaped where we are today. CERTEL launched in 1995, hence starting the mobile revolution. UTL started microbilling, where we had airtime cards that were only 5,000, 10,000, and they started to give us a chance to bill 500 shillings. So someone would go and load 1,000 shillings at lunchtime, 1,000 shillings when they have a deal, 1,000 shillings the next morning, etc. Microbilling. They might look like small events, but they define where we are today. MTN did two important things. One was it created believability, as in that time to have a phone and CERTEL, airtime was in dollars. They brought professors from Colombia that told them, if you are lucky, you'll make 50,000 subscribers in the first month, in the first few months. They got them on the first day and the servers crashed. The second thing MTN did was they made a lot of noise. If there were a presidential candidate, they would be in jail. The noise that helped people believe that these services are possible. I didn't move with my presentation, so can I pick my computer for a second? So he has to keep on that page. Just 1 second. Yeah, but I can continue the stories in the meantime. The third thing that happened was network coverage. So being able to have what I refer to as number harvest. Whether you live in a national park or in any town of country, you are able to receive network. This is important in such a way that people like us or even banks play in the fintech space were able to have the numbers that make the balance sheet. The next thing that happened was, I call it faculty of ICT. We had a very good resource of programmers that were able to feed into whether it is bank IT or us from the value-added services space or the fintech space, to have a good resource of programmers to be able to work into which is the next big thing. The ability to have open APIs for bankers' purposes. APIs, application programming interfaces, how applications talk to each other. So being able to have free ones. Then development partners and venture capitalists came in to give us the ability to take some risks. So what she was talking about, the role of FSDU and other development partners, they gave us the ability to play. So when you see some big players, they've had a hand where they say, you go and risk, we shall take the risk. Another thing was the C cable. Speeds increased and the cost of data was able to reduce. So the normal GB you'd use to be able to do work back in 2009 and today is a very big difference. And of recent, COVID-19, it has become a problem for very many people, but in our perspective, people started having conversations with us saying, maybe we try digital. Mr. Aung, for us in our trade, we call him the headmaster because he's the one in charge. So he said, cash is dirty, so it might sound controversial to banks, but we have to find a way of moving digitally. But all in all, as I talk about events, we are here because of, I think, 3 main events. One of them was the election violence in Kenya between December 2007 and Feb 2008, where banks closed. The only way you have to transact, to deal with the bank, was M-Pesa. M-Pesa was making 45 million before. By Feb 2008, it had increased to 275 million. That same year, in 2007, Cellulant connected to M-Pesa. And this created the revolution we are today. The second part is that China happened. You are able to get servers that were world-class speed at $5,600. You are able to get a smartphone at less than $100. That made a big difference. Those I'm saying, they look like they are not related, but to me, those are the events that created, when I talk about trends, we need to look at where we've come from and what has brought these small pieces of the chessboard together for us to be able to be here. FSDU, together with UK8, worked with the University of Cambridge to come up with what they call a masterpiece, to define what fintech is. So I think for purposes of the banking industry, you may not have access to this. It's fintech in Uganda by Cambridge Judge University, Cambridge Judge Business School, sponsored by FSDU and UK8. They define in detail what you expect to see or how you'd expect the different facets within fintech. So from digital payments to lending to investment and savings to insurance, banking infrastructure and markets. And they define it much, much deeper, from P2P payments all the way to how the point of sale can interact with a mobile, or automation of the ATM, businesses to peer, government to business. Either way, it's something you should look for. It's a very good read, 384 pages, I think, but it's a very good read that puts in detail what you expect to see. They even tell us a bit more, as in, this is what we've seen, but the future will be having things like cloud computing, machine learning, AI, etc., that are going to affect FinSpar in detail. A reading you should look for that will give you the definition of fintech. So what are we seeing? Different brands, Paga, Jomo, Paystack, Sente, Your Payments, Hamway, DusuPay, Loco, Flutterwave, Eversend, have come up with amazing products. There are over 170 FitSpas, but surprisingly, the ones that you see shining today may not be the ones shining next year. It's a very interesting industry where, I don't know whether you remember companies like Banco. Someone comes to the bank. Eversend was not there 4 years ago. So we expect to see much, much more. But what we see is next generation mobility. You see Uber, Special, Bolt connecting to mobile money. That's fintech. The real mobile money and e-payments, all the way to the examples of Payway. Supply chain and delivery apps. Right now, you order through Jumia and you're able to get your products at home and pay via mobile money or cash. We've seen insurance products, IO with MTN, MTBA with Standard Chartered and UBA. Quick mobile loans, M-Shwari, the Safaricom, Wewole, and Mocash with MTN. Government bonds, like she was saying, I think Bank of Uganda is working with FSDA to have an equivalent of M-Akiba. We've seen increase in social media platforms supporting, I'll call it fintech. You can be able to advertise your product on Facebook or Twitter or etc. Or even what you're doing now, we might be 20 people in the room, but there are very many people watching via Zoom. That I'll call it social media. We've seen attacks, the recent one being mobile money. I can't mention names, but I think some people in this room were affected. Cyber attacks are there and they're going to increase. This is what we're seeing as the reality in fintech. Cheaper devices, I've talked about that. Gaming has increased recently. An interesting one was between Matatu, a betting company, and mobile money. To be able to play Matatu that was online and you're able to bet and pay by mobile money. We'll see blockchain, things like land titles, birth and death registration, you're able to pay. Blockchain has created new trust. So people who believe in distributed ledgers and are able to integrate with fintech, to be able to deliver what people in this room expect. So all in all, we've seen, in terms of current uptake, we've seen a lot happen in the fintech space, and all I can say is this is just the beginning. He said that, and I'm repeating it, that money is not clean. Unfortunately, we are still using money. I would like to see you going to your local Carrefour or grocery and you're not pulling cash out of your pocket. Everywhere around the country. That would create different velocities, like I'll talk about later. Next slide. Anyway, so like we are going to see, I would call them notable shakers. We're going to see things mashed up. Where all you people are working for a bank,